We saw it fall really fast at the beginning of the day, and that was after around the world it had dropped a lot overnight. And so that was a combination of two things. The fact that the coronavirus appears to be continuing its march in the United States and in Europe, that there's some really severe problems happening in the Middle East, even as we're starting to see China start to get it under control, at least what we're seeing right now. So we have that happening, and on that backdrop, we have a massive drop in oil prices, that was caused because of a battle between Saudi Arabia and Russia as to how to cut back production enough to keep prices higher. That drop in oil prices really freaked out the markets, because normally a big drop in oil prices means the economy is slowing down. They put in circuit breakers to say, hey, let's take a pause and make sure where we're heading. Because what can happen is that automated trades and things like that can then build on each other and create a tidal wave that moves you further down. So they want to stop things and sort of reset and say, okay, let's not just let a cascading failure move us down. Let's make sure that we're moving down for the right reasons. So we know supply chains have been disrupted. We know entire countries have been disrupted. And we know that U.S. consumers are reacting to that because we've seen panic buying of some things, and we've seen them pulling back in other things. We know the travel industry is cascading down, in that business travel is slowing dramatically. And so really where we are now is it's clearer and clearer that this slowdown will continue to build unless we start to see the virus start to die out in the near future. I think we're going to see some more of this, and I think that what we're seeing now is that the supply chain in some places is starting to heal, in other places is starting to break. And we need to get a real feel of that to understand how it's going to affect the entire U.S. economy. But it's looking now like this is much more likely to cause the next recession. So we were on the cusp of being susceptible to a recession. And it's looking like this is probably going to be a big enough hit to the economy to knock us over. It still doesn't look like it's going to be a very deep recession if we have one. We're not looking at anything like 2009 yet. We'd have to see the virus get much worse for us to start talking about that. All the way through, as we look at through time, the markets tend to recover. Remember, the markets are about future profits of firms. All right? So what people are very scared about right now is going to impact the profits of firms for a few quarters or maybe a year. It probably won't affect the profits of a firm 3 years from now. And once traders can figure that out and get a better bead on this, then they'll start looking for buying opportunities, and it will pull the market back. That's historically what's happened.